Hello everyone, it's Joy and welcome back to QMake Weekly, where we bring you the latest Chinese steel prices and the market trends every single week. If you're new here, simply hit the subscribe and like buttons right here. Don't miss out on any future updates. This week, the Chinese steel market saw a volatile trend, not exactly the steady recovery many were hoping for. Let's break it down. For starters, demand after the Chinese New Year has not been as good as expected. Why is that? Well, it looks like construction sites just are not reopening as quickly as predicted, and that is especially hunting sectors like rebar and construction steel, which continue to struggle with low consumption. Luckily, it's not all bad news. The manufacturing sector is doing a bit better, with flat steel consumption showing a steady recovery. At the same time, the market is waiting and watching, hoping for stimulus measures from the Chinese government meeting in early March, which could provide some support for steel demand. On top of that, iron ore prices are getting a boost as Australia's iron ore shipments are lower than usual due to the ongoing impact of recent hurricanes. This is tightening supply, providing some essential support to steel prices. As a result, the market is being influenced by both bullish and bearish factors, leading to a weak and fluctuating trend. Next, let's examine the supply and demand side. This week, China's apparent demand decreased by nearly 450,000 tons. At the same time, total inventory rose by more than 1.5 million tons, and production went up. It is clear that the demand recovery is taking it slow, especially for rebar, where inventories have gone up significantly. But still, current inventory levels are not too high comparing to previous years. So while there's some stock piling up, it's not desperate at this point. The supply and demand balance is not looking too bad. So what's next for the market? Currently, we are not expecting any sharp, sudden price drops, but with no strong stimulus pushing prices higher, we are likely to see more volatility in the short term. All eyes will be on the progress of demand recovery and any policy change from the government. If they step in with more support, that could provide a much-needed boost. Looking further down the road, the market is also keeping an eye on a growing expectation that China's steel industry may soon face another round of production cuts. Let's stay updated. Well, what's your take on the Chinese steel market? If you enjoyed this video, don't forget to subscribe to our channel and give us a thumbs up. Just hit the subscribe and like buttons right here. See you next week. Bye bye!